Dear class, this is a lesson 3 to cover transaction and double entry system accounting. Business transaction is an event that occurs in the business with economic value that changes the balance of at least two accounts. For instance, purchases of motor vehicle. This is a business transactions. While employing two sales manager is not a business transaction. Recording business transaction is a multi-step process. Step number 1, you have to examine transaction and decide account to be affected. Step 2 is to decide on account to be debited and credited. Step 3 is to document the transaction in a journal. As we know that an account is an individual accounting record of increase and a decrease in a specific records. It might be asset, liability, capital, revenue, or on January 2023, the XYZ enterprise purchased the machinery paid by check, 30 million. This transaction has two aspects. One, to denote the increase of machinery worth 30 million. And also, it denotes the decrease of asset, which is a plus. So that's why on a machinery account, to denote machinery increase of an asset, that's why I've been recorded on the debit side. And on a bank account, it denotes the decrease of amount in a bank, therefore the amount is recorded on a. Now therefore, to record account of capital, revenue, and the liabilities, to record their increase are recorded on the credit side, while their decrease are recorded on the debit side. And the recording of these transactions are done in journal. So the transactions are recorded in chronological order in the books of time entry before this transaction being transferred to ledger. So step in journalizing transaction 1, we have to select the account impacted by transaction, account that get effect of the business transactions. Number 2 is to determine the amount of impact normally given or is calculated. Number 3 is to decide which account is to be debited and credited, depend on the rules of debit and the credit. Number 4 is to enter transaction date followed by the account to be debited in the first line in debit column. Number 5, enter the amount to be credited on the second line. It is amount in the credit column on the same line, and they indent the credit account. For instance, if you have a following transaction, example 2, enter the transaction of Alex, a sole trader, in the journal entries. On 1st January 2023, Alex started a business by following asset: furniture, 300,000, cash 200,000, and amount in bank 300,000. Transaction on 2nd January, purchased the goods 300,000, paid in cash 1,000, and the remaining paid by check. On 3rd January, make sales of goods to Susan on credit amounting 250,000 to be paid after 30 days. 5th January 2023, purchased the good on credit from Kituka amounting 400,000 in a credit terms of 2 weeks. So if you have to prepare the journal entry, it should look like this. The journal entry, we should have a column for date, a column for account to be debited or account to be credited, and a column for debit and a column for credit. So in this transaction, first transactions, account to be debited, we have to debit furniture, cash, and a bank. And the corresponding account will be a capital, which will take the total. But number 2, purchase, cash purchases will be debit purchases account by 300,000, credit bank account by 100,000, and the remaining 200,000 will be credited from a bank account. But again, selling good to Susanna on credit, we debit Susanna as our data, and the credit sales account. And then on 4th, make a purchase on credit, so we are going to debit purchases account and the credit Kitukas as our creditor. So this is how we show the entry. So journal entry transactions, as the business expands, the single journal entry cannot suffice the need of the business, and therefore there is a need for a special journal or special daybook to facilitate the smooth operation of the business. So normally we have a special journal which are commonly used as sales journal, because the sales is one of the transactions that are frequently encountered, but these are sales on credit. So sales journal to record as sales on credit, purchases journal also to record purchases on credit, and the returns, return inward and return outward. But again, cash receipt journal to record a cash receipt and a cash payment journal. For to have this specific journal, so we need, when we are preparing this special journal, then there is no need to indicate a debit and a credit balance, because the transactions are of the similar nature. So we are dealing with only one transactions which is of a similar nature. So we will have a column only for date, details, and amount. For instance, take an example, a sale on credit was made to Susan 250,000 as in our earlier example, and assume further sales were made on 6th to Juma 500,000 and Juliana 600,000. So to show a special journal, that is the sales journal or sales daybook, we need to have a column for date, details, and amount. And this should be shown the date of transaction, details, and amount. So in this case, the general ledger, which is a data account and a sales account, will be shown by a total amount. So if you go to the trial balance, you want to see the names of individual seller, individual data, and instead you will see a data account or account receivable to show the total amount. After that, get prepared for assignment number 2. And this assignment number 2 is due on 24th November 2023. This assignment is found on a handout of Introduction to Financial Accounting that were earlier provided, and specifically it will be found on para 3.6, which is a self-assessment question number 1, 3, 4, and 5. And this will carry 1 mark. Thank you for listening.